All right, let's turn now from equities to commodities, gold in particular. Here's a question. Can the old guard reserve Can the old guard reserve asset hold again? Look, this is the teleprompter thing. I'm not good at teleprompter. I just talk and they just hope that I don't say anything too crazy. Let's bring in Mike McGlone, commodity strategist for Bloomberg Intelligence. Mike, the question that we really have here, quite frankly, is gold seemed to have kind of lost a little bit of a bid here. We saw it go back down below that 1,700 level. A lot of people saying, that's it, the rally's over, and now everyone's looking at Biden's plan and saying, well, you know, maybe there's life left in gold after all.
Well, and so you nailed it. When you think the rally's over, when people say the rally's over, you have to question yourself, is it really over? Should I buy some? But you mentioned it partly in that messed up teleprompter. The problem is gold is becoming the old guard with this new nemesis, Bitcoin. And the massive flows are all heading towards Bitcoin and away from gold. So I think gold's put in a pretty good bottom around 1680 this year with that peak in crude oil around 68. And you mentioned earlier bond yields around 1.8 or so. But I just don't see a lot of upside for gold above 1,800 unless Bitcoin can give up its bid, and I don't see that happening right now. This is potentially a paradigm shift. Now, we've heard of gold, frankincense, and myrrh. Now, we don't hear about frankincense and myrrh anymore. And gold in investment portfolios is being replaced by Bitcoin. It's just a question of the duration.
Mike, can you remind me, correlation, dollar yields gold. So people say inflation is going up, yields are rising, but gold isn't going up, even though some think of it as a traditional inflation hedge, except yields are going up because there's also more growth and risk on, which is why dollar is lower. Can you explain that to me?
Wow, that was a lot there, Taylor.
Yeah, I'm confused.
As a commodity guy, I like to point out, if you're really looking for inflation, go to natural gas. It's down 90% from its peak. It's at the same price as it was 30 years ago. And guess what? It's the world's benchmark for heat and electricity. There is no signs of inflation from commodities. Crude oil's probably peaked around 68. That's the same price it was in 2014 when it broke out. So I point out that this is probably a blip in the trend. And the major thing to remember in terms of commodities is you're bullish commodities, you're bearish innovation, and Bitcoin is part of that innovation. It's replacing gold.
Yeah, let's talk a little bit. First of all, I have to point out that Mike looks very dapper today, by the way. I got to step my game up if he's going to come onto the set like this. But when we talk about Bitcoin, I mean, it's no secret here that I've been a gold bug for years now. And I sort of poo-pooed Bitcoin kind of in the early and most of the digital currencies. But you see a lot of parallels now between the reasons why people would buy precious metals and hold precious metals, to be specifically, and why they're now doing that with crypto assets here. When you talk about Bitcoin sort of replacing, or at least sort of coming in onto that turf here, do you see this as a permanent change rather than something that's maybe just kind of a slightly generational shift?
Romaine, I'm the same as you. I've been a gold bug for a long time, and I view it as permanent. To me, it's the most classic example of human nature that really matters in markets. If you've been holding or investing in 100 units of any type of investment, most notably gold, for the millennial, you know for history, you know if you don't add at least one or two of those units to gold, you're at greater risk of missing out and looking like an idiot if Bitcoin continues to doing what it's been doing. So you have to allocate some to Bitcoin just to alleviate the risk of missing out, of this becoming the new digital reserve asset. And by the way, it's well on the way. We saw Goldman flip this week. We saw JP Morgan. We saw Morgan Stanley recently. The dominoes are falling for Bitcoin in favor of Bitcoin against gold.
Yeah, there was a fantastic story on the terminal today about how a lot of these big banks kind of missed out. I mean, you had all these wealthy folks who really wanted to sort of invest in this, and they couldn't do it through the traditional banks, and they had to go to Gemini and other platforms. So a lot of money out there.